Well, good afternoon, managers in the making. I want to welcome you to today's engagement, which is happening virtually and continuing from where we had stopped last week in the physical engagement. We had in the previous engagement introduced the concept of subsidiary books, and we looked at the first five. That is the general journal, where we say that it records all transactions of any nature, whether cash, whether credit, whether acquisitions of assets, whether commitment of liabilities, whether adjusting entries to the ledgers, etc., etc. We say that we do use a general journal. And we also introduced specified journals where we had the purchases debtbook, purposely to record transactions that happen on credit, sales debtbook, to purposely record transactions that happen on credit. In this case, sales happening on credit. The first record was responsible for purchases that happen on credit. Then we talked about the returns inwards debtbook, call it the sales returns journal, that records transactions of sales made to the public earlier that get to be returned to the business. Then we also talked about the returns outwards journal, call it the purchases returns journal, for recording goods that were bought by the business and now get returned to the supplier. We made something so specific that all these four records, sales journal, purchases journal, sales returns journals, purchases returns journal, all of these to do with inventory movements, and we made it clear that inventory in a business will only relate to those items that we hold purposely for resale. They constitute the daily routines of a business and so on. So we talked about that, but we also introduced a concept of my Cashbook, where transactions on cash get to be recorded within a business. So we are here today to now extend the discussion of a Cashbook, because we exhausted. What about that? We exhausted the first 5 subsidiary books, including looking at the key documents we would use as source documents to record transactions into those records, those books. So now the sixth, which we didn't look at last week but introduced it, is a Cashbook. Cashbook to only record transactions that happen for cash. So we are here to look at it today. To introduce the concept, we are saying that the Cashbook is also a book of original entry as well as a ledger. The Cashbook records all receipts and payments of cash, and this one cuts across cash transactions, but also transactions that happen to be executed via bank, and that's where we trade with checks. Actually, in accounting, when you get a transaction and they are telling you that it happened by check, and then just know the account of interest being referred to is the bank account of that business. So, because it only deals with cash, then we say it is a cash book, and therefore only handles cash transactions. On the other hand, it is a book of original entry. For one simple reason, transactions that happen on cash get to be first recorded within this record before they are posted to the respective ledgers, just like we looked at the other subsidiary books. In a practice, a cash book has two columns, two accounts. One is the cash account, but the other is the bank account that it embeds. And because of holding several accounts in it, it gets the name a ledger. I hope I'm clear. It gets the name of a ledger because it has several accounts. It has several advantages, and one of them is it will create a reduction in the number of entries that happen to be posted in the ledger at the end of every period. Why? All transactions for cash get to be recorded in the cash book, and at the end of the period, totals are transferred to the cash ledger and other relevant ledgers. This book is under the charge of one person, so ideally there will be efficiency while trading with it. What happens in a business organization is that not every Jack and Jim is responsible for cash. It is only selected individuals given full authority to trade with the cash. So because of that, the controls are easier, and it is even easier to follow up with someone in case there are any anomalies with the cash because we know who is responsible. So that one creates efficiency in dealing with the cash, but also improves and enhances the control aspect. It is also easy to make references relating to cash movements. Why? There is only one record where these entries were put, and they're either real cash, that is cash at hand, or it is cash at bank, and in its case, two accounts were used, the cash account within the cash book and also the bank account within the cash book. So that you can now easily tell what went on, what happened when, so you can now flow through and ensure that you track anomalies. Now, cash books take several columns. The first one should be, actually it should be the one column, which is only the cash account. And we are not mentioning that one here because it becomes obvious that the cash account particularly will have one side of cash receipts and another side of cash payments. So those accounts we have been looking at before get the name of a cash account, and one side is receipts, the other side is payments. So you're not going to dig into the engagements of that account, the details in it. That's what I can say about it. In practice, we shall start with the two-column account. Why? Because it's always advisable that firms or business entities create separate funds by reducing the amount of cash at their disposal. And that way, they do get just little remains at office to ensure that daily routines are run. You see, it's not advisable that every time you get a border delivering for you something, you run to the bank. That when you want to buy tea, accompaniments, sugar, and what have you for your staff, you run to the bank. No, you need to have that little money at the office that helps to run some daily routines. But it should only be to that amount of cash that doesn't raise security threats. That way, you will always be advised to keep just too little, and then to enhance security of your financial resources, the cash resources, and also increase convenience to have comfort on you. you transfer the other risks to a third party, in this case, a banking institution. So by only keeping too little in office, and then you have a bigger portion of the cash resources of a business kept at a bank within a bank account. So, because of that reason, we talk about a two-column cash book. Why? It will have a cash column and also a banker column, and that's the name two-column cash book. We shall therefore need the two-column cash book to record these transactions. The two-column cash book contains the cash account and the bank account. And I'm going to demonstrate such that people can understand. So before we engage into recording transactions into the cash book, when we talk about when we talk about when we talk about a two-column cash book, I think it would even be better to use Excel. Let me not waste a lot of your time. Where is my Excel? Okay, let me get Excel first. Let me create Excel first. And Excel might be eating our time for no good reason, but I think it helps us to navigate fast. Yes. So we come here and create what we call a cash book. In this case, two-column cash book, two-column cash book. So I think I can magnify this for improved view. We can take it to some better view. So now we have that, and it has to be practical a bit. Create. At times I forget where my art is, and now you see I cannot tell you where to get my shapes. I think they are here. So we create this as an account. I think it's better to name it Parity Black. We also come and so we make the first two divisions the major ones. Now those major two divisions are the first column, the first side is for cash receipts. The other side is for cash payments. The beauty is we are only dealing with cash, and so you do not get intimidated. Because of that, here I think we can merge to simply create one. Even underline the word receipt. And also merge this and underline the word payments. So in general, that's how it looks like. This side, which is the debit side, is called the receipts side. And we don't even need to create debit or credit. Now, we create two key columns where one column is cash. Are we there? This is the cash account within the cash book. Cash account of the cash book. And improve this. Then this one becomes the bank account of the cash book. And we are there. So, shall I always have a column for date? Then we shall have a column for them details. So like that. This one we can. Why did it over jump that side if I didn't make it jump? Something like that. So, because we're only talking about two columns, the two columns mean one is a cash column, that is cash at hand, and another column is the banker column for cash at bank. So we also do the same here. We have date, we have details, we have cash at hand, we also have cash at the bank. I hope that one is okay. So when transactions keep taking place, which are those transactions executed for cash, we record them based on their nature. If they are cash at hand transactions, if they are cash at banker transactions, we use this record, and this is what we call two-column cash book. I hope members can see that. So, for example, if on day one of a particular month, let me say this is September, so probably we started on September 1st. Surely there is even one thing I have to make clear. Because these are now accounts, we may be opening with first day of September, might be having balances brought forward in either of these two. So you may have some amount of cash brought forward from the previous period, and then some amount of some amount brought down on your account. So you record that because it is available for you to use in the current period. It is part of the assets you open with. Then when transactions get executed, for example, you can come on maybe September 3rd, and maybe you make a sales, and sales becomes the details because it is active done. So you record the first side of the transaction here. So it could be sales for cash. Sales cash at hand, or it is sales and you're paid by check. If it is sales cash at hand, you record here, and then you go on. Another day, you can have sales. Because usually we are going to be getting our cash through sales, and maybe on a certain day, you make a sales. Okay. Now, in this case, sales happen to be in the bank. They are the record. Then it may be on 4th here, September. Maybe where I went a bit so fast is that we would have recognized the payment that happens on 4th before we record a sale of 5th, because we record transactions as and when they happen. So here, maybe you are going to make a payment for maybe transport. Just maybe border has delivered something. You acknowledge and take care of it. So that transport you are paying, it's a name, and maybe they have delivered it at your premises, you pay by cash, so you record that, and so on and so forth. So that is how a two-column cash book looks like. That's how it looks like. Okay? So we can now go back and appreciate a few details we created in our notes. Don't know, was I sharing? Was I not sharing? Sorry, I think I didn't share. You can forgive me, and now I share. This is what I meant. I think I recorded this. I created this. So this is what I meant by two-column cash book. You create it, The name is of the record is put on top. One side is the receipts, the other side is payments. And you have date, you have details, cash at hand, cash at bank, and the same happens to the payments side. Now you record on the first day of the period you are accounting for, this being a cash, you probably have draw balances that you closed with in the previous period at hand and at bank. So those ones become the opening entries. Like you see, it is balance brought forward from the previous period. Then you record what was brought down, forward in cash at hand and then cash at bank. Then you probably start on your transaction for the month, maybe on day 3 of September. You make a sale and it is happening for cash. You record it under the cash column. Then the language is cash column only, banker column only, if you have heard about those. So cash column only records the cash at hand. Banker column only records cash at the bank. So maybe on 4th September, you have to pay for transport, maybe a border guy who has delivered some package for you. You do that, you record it there on the payments side, and it is happening as cash at hand. Maybe on 5th September, you make several other sales. You record them for cash, only cash sales. Maybe on 7th September, you record some payment for purchases. You come and record them here, like that. But these purchases happen through the banker because you are paying by check. So you do that. And therefore, in a nutshell, that's how a 2-column cash book looks like. So you continue record all these transactions, and by the end of the month, you ascertain the totals of the various accounts in here. You transfer them to their respective ledgers. The same way we are looking at recording using the journals. So that said, we can now go back to look at the notes that I prepared in the PPT. So here we are. So recording into the cash book. So we said that the cash book serves as a book of problem entry, and hence there is need for source documents where information to record is sought from. The several documents here under can be used. We talked about receipts. This refers to acknowledge that receipt of cash took place, and this can be cash at hand or cash at the bank or via the checks. Normally, receipts are given to the firm or the person paying the business. So it could be any kind of outgoing receipts. I think that's not new now. We can have cash deal slips for cash sales receipts as evidence of cash received from sales made. You have visited supermarkets, this is a common concept in there. Those direct or instant receipts generated and paid to you, are issued to you when you you buy from supermarkets. Okay, those can be cash deal slips. Paying in slips, if you go and you record, used as a record of cash or checks deposited into the bank. People, when you go to your banks, you have usually been issued with evidence of cash deposit. Okay, you have always seen this, and if you put your deposit a check, you will also get that paying slip for recognizing that a check has been deposited. Banker statements, I think this is common evidence, common knowledge to us. I suggest, I guess, that we all have bank accounts, and so we can easily tap into our banker statements. And these ones will show us cash movements within our bank accounts. So when you make a withdrawal, a record is entered. When you deposit a check, when you withdraw via check, okay, you will always see, you track this info in your bank statement. A bank statement is simply a record of transactions that happen on your bank account. purposes of satisfaction, I can challenge my students, my candidates here. Make it a point and visit your bank accounts. You will get surprised that you people have a lot of money that has exchanged hands within your bank uh, records. Then we can have payment vouchers. Basically, these ones authorize payments. They authorize payments. And then we can have counterfoils of checks. When you issue out a check, your checkbook has that record, small record remaining on the left hand where you jot a few details relating to the checks that you have issued to the respective beneficiaries. So basically, those would be some of the key source documents that will require to create a cash book record. Okay, if that is okay. So if that is okay, this is how a two-column cash book looks like. I've already shown you this, I think, in the Excel sheet that I was trying to create. So basically, details, date. I think I forgot the column for folio, but you have already known that folio tracks reference. Cash, bank, so that is the payment side, and so sorry, the receipt side. Then you also go payment side and create the same details, and that's how we shall be looking like. So maybe now I should introduce a concept of contra entries in the cash book before we can look at a practical example. Why? Because they will always happen. And we are saying that contra entries are very important part of the cash book. They can only occur because there are two accounts sent out, that should be set out aside. I think I'd just that contra entries. It should be, there are two accounts set out side by side. Two accounts set out side by side. The word contra is a Latin terminology, and the meaning of it is opposite. So contra means opposite. Contra entries appear on both sides of the cash book because the bank account and the cash account are affected in opposite ways. In practice, letter C is placed in the folio column against each contra entry to denote that double entry has been completed. I think this all remains literature and we may not have comprehended well, but when we talk about contras, what do we mean? We mean transactions happening in a business recorded in the cash book, and we have said that cash book only records cash transactions. But now these transactions happen to be between cash to bank and banker to cash. Cash to bank, that means I have a lot of cash at my disposal and I want to reduce the risk. So I bank cash to the bank account of the business. Because of that, you see that two accounts have been affected. Cash is affected, but also banker is affected. These being assets of the same business, trading the same asset. So we shall now introduce a contra to complete double entry. Meaning when you get cash to the bank, that means we are debiting bank account for have gained value, but we are crediting the cash for having given away value. Being in the cash book, we shall now introduce letter C to denote completion of double entry. So letter C comes into the folio column of the cash book. We are going to see that practically. We can also have cash coming from the bank to do operations at the business. And so we withdraw from the bank account to increase the cash resources at our disposal. That means we are going to debit the cash account for having gained value. We shall credit the bank account for having given away value. So in that case, you see that that one should happen on the payments side, banker payment side, bank account, but payment side. Cash to the bank, bank receives. So we come to receipts side and the debit bank, and then implied the cash account gets credited. But we're going to look at that practically. Contra entries are made to record the following transactions. That's what I've been explaining. When money from the bank is taken for office use, so you get bank cash to the business to do office work, to do business work. When money from the office, money from the business is deposited into the bank, so those are contracts. Okay? And now we can get a little bit practical entries into the cash book. Okay, contra entries in the cash book. So we're going to see how they happen, and we are going to look at a practical example. Practical one. I don't want us to look at what I've already solved it with biases. Let us just understand this as is. So we want to create a two-column cash book using this information. We are saying that Mr. Sabiti Stephen started a retailer business in Ntungamo town was selling groceries with cash in hand of 100 and cash at bank of 50. I think some of us know Ntungamo, whether you were born there or not. Must be knowing Ntungamo. First of all, it is a very important district in Uganda. It is the mother district of the first lady, so by default we should know it. And some of us have trekked up to, I think, Kigali via bus. So you cannot go there unless you have used that route. And above all, it is incumbent upon us to know Ntungamo. So we are having Stefano Sabiti, a trader there, and he's a grocery dealer. This is what he executed just in the period of February. He opened with 100,000 cash at bank, sorry, cash at hand, and then cash at bank is cash at bank is 50. So during that period, he did the following transactions: bought goods for cash, he sold goods for cash, he paid rent by check, deposited cash into the bank. So that's a contra. You should identify that already. Cash drawings for the month were 5,000. Received a check from Opio, made cash sales, paid salaries to his employees using cash, bought goods and paid by check. He banked all the excess cash. He banked all the cash except 5,000 in Kumitan. Now required of you is to prepare a two-column cash transactions and balance it off at the end of the month. So members, my request is that you pick these transactions and interpret them, because we are going to use them to create our cash book. So the best record we can use to flow with should be Excel. So for purposes of flow, I think you have taken a screenshot of this so that you can keep flipping into the transactions that happened during that period. So I am now going to go and borrow the Excel sheet and use it to post these transactions. Okay, so if we are to go to Excel, here we are, we shall be. So we can create two-column cash book. This cash book has a name. The guy is called Sabiti. Stefano. Stepuhen. I think something like that. He need to give us, he did not give us. So that would be the first thing to do. We create, okay. So like we said, I think this one can be hidden somewhere there. Not to confuse the class. So and you'll get these notes, the audio recording and augmented video at your free time. You'll be in a position to read, follow through, to understand. The way I fail to understand, you go back and consult the video because the lecture is now asynchronous. Okay, so that is Sabiti. And so we create a record here where we want to track. So we can maybe extend this a little bit. I want to get your experience of flowing from a recorded lecture. Would love to get feedback. And if it works, then I think we agree that, you know what? That man should never come back to our class because he eats a lot of our time and just be here without him. So we said we shall have a column for date. So I created that. We have a column for details. We created that. We have a column for cash. We have a column for bank. So that's what I'm putting this side. That's what I'm putting this side. Then this side and this side. Now, what is important? You people should be so consistent with the currency you are using. I think those transactions happen in cash. I mean, UGX. So we need to put them there. Recognize the currency of transactions. Even bank accounts of ours are kept in UGX. So this one becomes date. Have I left out anything? I think yes. We'll sort it. So basically, that is that's a two-column dashboard that we are creating. I think I am seeing where I faulted. I can just make improvements to that. Just make improvements to that. We needed one column up here. Let me insert it. And that column is none other than the receipts for cash. Receipts for cash. And then payments for. So receipts can come up with that. We merge and centralize, then even payments we come up to that members. So if that is true, you have seen that on a particular point. Hey, my battery wants to run down. Sorry, let me create it again. That man here chose to teach us online recording. He did not So here we are. So we go back to our question that I projected earlier, and we'll keep tracking. So the first thing we have from that question is the opening balances of cash at hand 100 and cash at bank 50. These ones must always appear on the debit side, which is the receipt side. So on February 1st, the first transaction that will appear will be balances brought forward. And the cash, we said we have 100, and we said that bank we have 50. Record them as is. Okay, so that's what we get first. Mind create these. Think something like that. So that is what happens on day one. Then that's what we start with. Then on day one, we buy for cash, and what we are buying is 20,000. So you begin by expanding. You come to the payments side. This is Feb 1st. Sorry, Feb 1. So what you have is to buy. And when you buy, you pay cash. We paid the 20,000 to take care of the purchases we kind of did that day. So there we are. We record under cash as the cash account. Then we go to the next transaction that happened, which was selling goods for cash to one of our best clients, Muteraba. So you go, and since it is cash, you don't need the name Muteraba. I don't know that transaction happened on which day. Transaction happened on 2nd. The transaction happened on 2nd. You come and take care of it, and it is 30,000. Okay. You come February 2nd. Customer, we don't need them, but what we are doing is to sell for goods cash. This is 20. Sorry, it was 30,000. So you record that customer viewers. Then you go to the next transaction. We paid rent by check and the amount is 10,000. It is okay. You can track at the date when the transaction took place. I think this transaction took place on 10th. You can record 10th, February 10th. What you did that day was to pay for rent, but they are saying you paid via bank. I mean, you paid by check, so the 10,000 goes to the bank account as an expense. You deposited the cash into the bank, 40,000. Now this is where contras come in. You deposited the 40,000 into the bank on 15th. You come and say that on that day, 15th, February 15th, you deposited cash into the bank. So what happens is that on this particular day, the account of interest as a narrative or as details becomes cash, and this cash is entering the bank account as 40,000. So the bank receives 40 on that day. But we said that there should be a column placed here referred to as the folio. I think I'd left this one out. Now the folio column receives the letter C to recognize double entry being completed. I can even put this, I think, in another color. So letter C is telling us that this is a contra entry we picked cash to the bank, so cash gives away value, and the bank receives the 40. Then on the same day, we must recognize that. So now this is how double entry gets completed. Now into the bank account of February 15th. February 15th, we have a transaction, which is, I think I'll also insert here contra. I'll insert here intra to help us recognize the aspect of contra entries. I mean folio, column for folio. You come here. So you realize that on this day, cash gave away to bank. Cash gave away to bank. So we put letter C, and what cash lost was 40,000. So something like that. For purposes of clarity, let me change the color here and that figure. So that is the case. So on that day, we record it also as a contra. I think this is getting too big. I can reduce it a bit. Still, members have been in position to see when they navigate through. So, I hope people have understood the concept of the contra entry. Cash picked to the bank on the receipts side. The bank receives and have posted the amount 40,000 as cash coming from the bank to, cash coming from hand to the bank. I've recognized that. I think, I hope members can I've recognized it as a debit entry in the bank account from cash to bank. Then on the payments side, I recognize that the bank, cash gave away to bank. So under the cash account, the narrative is, this is the cash account, right? This is the cash account. Within that account, the narrative gets to be bank. I hope I'm trying to communicate. Okay, so that's what we shall have. So can you continue with other entries into the cash book? Okay, can you continue with other entries into the cash book? We're looking at transactions. So on day 16, we made the cash drawings for the month. That was 5,000. We'll go back, Excel, and talk about a transaction. This is Feb 16th. What did we do? We drew out in cash. So these are drawings. Drawings. So it should not be a receipt, it should be a payment, because drawings can be recognized as withdrawals, and so it is cash going out. We come on 15th, on 16th Feb, and the narrative is drawings, and the amount involved was cash of 5,000. So you recognize that. Then we go and look at another transaction. Okay, another transaction is we paid Opio, received a check from Opio 60,000. So that one automatically becomes a cash receipt on day 20th. Day 20, we come and recognize that from Opio, friend Opio received, so the date is 20th, Feb 20th. We have Opio received from Opio, and it is cash, the main check, received a check of 60,000. So you recognize that one under the bank column. Then you go to the next day, which is 25th. You made cash sales. So you receive some sales, please. 26th, you sold it for cash. So that is February 26th. Please recognize the cash. How much was involved as cash? The sales were made sales worth 15,000. So you come and you come and recognize sales for cash 15,000. So the narrative becomes cash, and it is got to be entered under the cash column. So the other transaction is on day, the other one was, I think, 25th, not 26th. On 26th, we paid salaries to employees using cash 2,000. Just a minute. So there we are. There we are. Our Excel is, I think, being seen. So on 26th, we paid salaries. So salary payments becomes withdraw. I want to collect this date first. This date was February. This is February 25th. That's when we made a sale. Then on 26th, we made a payment. February 26th, we paid salaries. Just for playing around, we paid the salaries via, was it cash? To confirm, it was cash for our employees, and it was 2,000. Okay. Then next transaction, we realize that on 28th, we bought goods and paid by check. Here we paid 30,000. February 28th, we made some purchases and we paid by check worth 35,000. Please recognize that. There we are. So now we are moving closer to the end of, I think, the month. So if that is the case, now we can look the other bits of the information. We are being told that we banked all, Subit banked all cash except 5,000. So if we banked all cash except 5,000, it means that what we do now is to come here on the last date of 28th. That statement means that this happened. So we shall have the closing balance in the cash account. We are carrying it down, balance carried down in the cash account. We have been told that the active cash account will have 5,000. If you are so critical, because that is what he left with. He remained with unbanked. Okay, unbanked was 5, and the rest he banked it. But we don't know what he banked. So how do we get to know what he banked? get to know all of the cash receipts vis-a-vis the cash payments. How do we ascertain that? In your cash receipts, you can total this. And when you total that, you see that one gives you a figure of about 145,000. Now, of the 145,000, we shall take off all that was paid. Just a minute. So we are going to come and say that on a particular day, I think this entry might have come in a little bit early. This one we may first disregard it to flow well. Let us first disregard it. So it means to get how much he banked, you will need to have, first of all, how much he received, and how much he received is here. Okay, you can see how much he received is that total 145. For simplicity, this one being a closing figure, you can even close off this account. Because we are told to prepare and balance off. So you close off that. Since he is banking some cash, it means we shall have a contra entry on this date of 28th. 28th, shall have from cash, we shall have to have a contra here, like you see, shall have to have a contra here. Note we are banking from cash, and how much are we banking is what we don't know. But how shall we know how much we are banking to satisfy that condition of he banked all the cash except 5,000? We have total cash receipts for the period, including the opening balance is 145. And then total cash payments will make this figure here. 20 plus 40, that is 60, plus this, that is 65, 67. Unless otherwise, I think we have 67. So 67 taken off 145. For illustration purposes, we can have 67 minus a total of, okay, let us first temporarily ascertain this total also. We shall erase it. So 67 is here. So to get the difference that will give us how much he banked is 145 minus this total here of 67. So left with us is 78,000. Now over the 78,000, he is supposed to bank everything, but he only remains with 45. He banks everything and he gets to remain with 45,000. I mean, he remains with 5,000. So it means of the 78, only take off 5,000, which remains in cash, and bank the rest. So we shall have this. That one we need it. I think to be consistent with this day, it does not need to happen there. Can I create another column here? If the answer is yes, then we are going to be good to go. Or if not, let us start afresh and create here that transaction, Feb 28th. We are banking cash to the bank, so the account that receives will be bank, and the banker will receive. I've told you that we have 78 as cash left before the month ends. So the 78, we shall only bank a 73 because they've told us that the other one is a balance. So this is C to denote C to denote contra. This one enters the bank. This one I've already agreed it enters the bank. And so if that is the case, then it means that the totals for the, so we also first take care of the contra here, which is now on this day, February 28th, we have bank receiving from cash, and we put letter C to denote contra. How much is cash giving away? We have said it is 73. And if that is the case, I think we can reduce this a bit, the font, ensure that space is enough for us. We can go back at about 16. Yeah. So from that angle, you now realize that we have totaled the cash account. We shall also now need to total the bank account, which gives us that total when totaled. Hopefully that's what we have. Sorry, I had a bit, I think, muted unknowingly. So you realize that when we total up this side, we have that total. And if that is the case, that means that on the same date here, we shall need to ascertain the closing balances. That means 28th, we have table 28th. So here what is important is balances carried down. And in this case, for cash, we have already been told that we have only 5,000 within the bank. Bank, we don't know. So we ascertain how much we have as left with us on that day. How shall we tell you that? We get the total. We get the total, which is the cash received via the bank minus total cash payments, which was this, and the 35. Sorry. So it is that minus this. And so we shall have the figure. I don't know. Are we good to go? Is that the balance that we have? Just a minute. Okay, let us, I think this does not come to that. We are saying this column here, this should be total we received minus what we paid out via the bank. So it is 10,000 and an extension of this. So it is, yeah, it is that. Now it means that the total here should be that, and also the total here should be that. So with that, we shall have created a two-column cash book and completed it, recognizing entries that would appear from either sides, just like that. And if that is the case, I think we are good to go. So, in a nutshell, this is how it will look like our two, our two-column cash book for simple purposes. For simple view, it will look like that. This gets to be now, these to the balance sheet, these today get to be the opening balances when we start a new month. In this case, it's going to be so this is how it looks like if we create it. And I'm saying that 5,000, which appears on the cash account at closure, and 178, which appears on the bank account on closure, will be the opening balances or the balances brought forward in March. So in a nutshell, this is how a two-column cash book looks like. And two columns simply because it recognizes cash and the bank account. So we should have this for reference purposes. Now I can take you back to the slides and you will see what we exactly mean. I created that solution somewhere for you, easy to tap into and see. So if you see this now, that is how our transaction would look like. Our hash book would look like. So this is what we have. You can easily see that. It is even captured in your notes. Okay. Yeah, basically that's a two column. Unfortunately, we may not have time to interact on questions and what have you there, but I think at the right point, we shall have some feedback. You can even post when you so basically we have that. Now, how do we post from the cash book to the ledgers? It is the other science we did last week. You have seen all these different accounts that have been created. Did I error? I think I erred when I was creating this because I think we said we started with, it is not opening balances, but capital. Sorry about that. I think I had interpreted this as the balances that we brought forward. Instead, it was capital. So I think we need to correct our Excel. We need to correct our Excel. Sorry. If it were just a continuation, these ones would be opening balances. But because it is not a continuation, these ones become capital entries. Capital, that is at cash at hand, and then the other is cash at bank. I think I've corrected that. This is because it was a new business starting. But if it had already operated, that would not be capital. It would mean the balances we have at the start of the period get to be opening balances. I think that one is also home. I had made that little error. I've now rectified it. Now we can go back to the slides to flow well. The slides. Yes. This is a solution I've been talking about. That is the solution. Slowly. we can see that's the solution. That's the solution. Yeah, so that's where we are. Now, how do we post from here to ledgers? When you go back at your cash book, you see you have created different accounts. So now you create a general ledger and post the different accounts that appear here. For example, capital will go where it should go. That should be, it goes to the general ledger as a capital account. Now within the general ledger, you're going to create cash, you're going to create bank, and then we're going to create the independent account. Sales will appear there. So what you do here to create the general ledger, you see wherever we have had sales for cash, you total them. We have sales on Feb 2nd and sales on Feb, I think 15th. So those will be 40, we'll make a 45,000 as cash sales. So when you go to the sales ledger, you create, you debit it with a total, sorry, you credit it with a total of 45, recognize sales for cash. When you go to the purchases ledger, purchases ledger, you'll have entries of, so you look at wherever we have made purchases. We made 35, we also made, I think, just a minute. Sales, we sold and sold and sold. Yes, we sold twice. Then we bought purchases via cash and purchases via bank. So you total them up. So those constitute your total cash purchases that you're going to take into the purchases account. Then in the other accounts, you create them as is. Drawings becomes an independent account in the general ledger. Salaries becomes an independent account in the general ledger. Even bank becomes an independent account. Cash becomes an independent account. etc. etc. And that's what you would do the same way. We created ledgers from the other 4 books we looked at last Saturday. So now that you have this Cashbook, you can now post your ledgers. Like we are saying, all of these get to be posted, but we don't post contra entries because double entry has been completed, okay? So all entries except contra entries and balances are posted to the appropriate accounts in the ledger in order to complete duality. All debit entries are posted to the credit side, and all debit entries are posted to the credit side of the ledger accounts, and credit entries are posted to the debit side. What are we trying to mean? When you come here, for example, you see when you see debit entries into the cash book, one of them is capital. So capital becomes a credit entry in the capital account, right? Why? Capital accounts in double entry are recognized when we are recording increases in capital with credit. When we make a sales with credit, okay? If we received from OPO, that means OPO was a debtor. So when they pay, that asset reduces. So reduction in asset, we credit. Sales, we credit. etc. etc. What we don't tap is the contra entries because double entry has already been completed. So we do the same when it comes to the credit entries, purchases account. When you purchase, assets increase, inventory increases, you debit. So that's why we are saying that all debits are entered on the credit side of the respective ledger account, and the debits, the credits are entered on the respective side of the, on the debit side of the respective ledger accounts, and something like that. Okay. So I think that is okay. So in your free time, ladies and gentlemen, I am going to request you to do illustration 2, as you can see. Now here, we don't have a capital, but we have opening cash balances, both at hand and bank. You can see it is not capital because we are not just starting. We are, you see, record the following transactions of and Sons Limited into their cash book and balance it at the end of the period, then post it to the relevant accounts. So here we have balance brought forward from last month, not capital. Not capital used to start a business, but balance is brought forward. So I can have that now. These are several good transactions. You see cash sales, check from Nakato, paid rent in cash, banked 100,000 of office cash, cash purchases, paid Emungobi by check, cash sales paid directly in the bank, paid wages in cash, received a check from Onet, cash sales withdraws from the bank for business use, paid insurance by check, cash purchases, paid this salary in cash. So can have these transactions members and please look at them in this period, look at them, post them to the relevant, to the cash book, balance it off at the end of the period. I think that one makes it a little bit easier. So if that is okay, then now we can introduce the concept of three-column cash book. To save time, if we have really understood the concept of two-column cash book, where you only have two columns, the cash column and the banker column, which appear on both sides of the cash book, that is the receipts and the payment side, we can now just extend the discussion with three-column cash book. And we say that this is the traditional two-column cash book. The only difference or the only addition now is that we introduce an extra column either sides to track discounts. Okay, so when cash discounts happen and they're supposed to be recognized or we recognize them, then we cease to use a two-column cash book, but will introduce the concept of a three-column cash book. So that means that on what we had as we record cash at hand and cash at bank, we simply introduce another column, which is now discounts. We introduce discounts received and discounts allowed columns. So on either sides, as we are going to see. Trade discounts, the concept of discounts rotates on both trade and cash. We have what we call trade discounts. And here, when traders buy in large quantities from the manufacturers or from the wholesalers, they are given a reduction of the catalog price, the goods. This reduction in price is known as a trade discount. Okay, it is a trade discount. When you buy in bulk, you are allowed a trade discount. Manufacturers recommend a retail selling price, invoice the goods at that price, and allow retailers a discount as an incentive for bulk purchases. So that's why people who deal with large volume transactions of purchases are buying them at relatively lower. And because of that concept, they are in a position to sell it to the other next level at relatively lower prices. That's why in the distribution channel, we have manufacturers, we have agents, have wholesalers, and then, manufacturing from, distribution, then from manufacturing to distribution to agency, to Ziti wholesaling, now to retailing, to now the end user. So the large volume buyers win what we call trade discounts. And in that case, they simply get reduction in the invoice price as an incentive for buying in bulk. The other discount is the cash discount, where the prices get to be reduced, and this is done to induce the people who buy on credit to pay promptly. The cash discount is made known to the customer in the invoice issued when goods are sold to them on credit. Cash discount is of two types. It can be discount allowed or received. Now here the concept is, when you buy on credit today and you are given terms on when you should settle and what benefits come with the settlement, then that is a cash discount, not a credit discount. Credit discount is credit, buying in big volumes, so you get a credit discount. when you get an instant reduction in prices. You are buying in big volumes, but you're paying promptly, so you get that offer of a reduced price. With the cash discounts, you must have bought on credit. And as you buy on credit or sell on credit, you issue terms into the invoice. Now, if you want to recover your sales so immediately or soon, you will have favorable terms. For example, if I buy today and I'm supposed to pay you after 30 days, but then you come up with an inducement that, if you pay after just 15 days, I'll give you 2% price reduction. If you pay within 10 days, I'll give you 2.5. If you're paying about after 20 days, price reduction gets to be 1.5. If you pay exactly on 30 days after the invoice is issued, then there is no reduction. If you further delay to pay, there is a penalty. Okay, so those are the connotations under which the discounts of cash come into perspective. And we are saying they are either allowed or received. Discounts are allowed to become business expenses because it is the business giving a reduction in price, the invoice price, to its customers. And for that reason, they are on the debit side because they are trading expenses. The cash Okay, so the received discounts constitute incomes of a business, and therefore we credit them to recognize increase in income. Okay. So we are saying that allowed is an expense and received is an income. Discounts allowed is the allowance given to the customer by the business to encourage them to pay promptly, since they are given to accounts receivables or debtors, customers, when they pay. That's why it is on the debit side of the cash book. Okay. Received is a cash discount that firm receives from suppliers or creditors for property payment. That explains why it is on the credit side, because it ushers in an aspect of income. And this is how a three column will look like. Since I've already detailed the two column, now a three column only introduces one extra column either sides. That is discounts allowed on the debit side and discounts received on the credit side. The aspect of contras continue to be tracked in here. Contra entries continue to be tracked in here. When they occur, you recognize them. So that means there is need to create a folio column to track a contra entries. Okay, contra entries. That said, we can now look at a practical example. Three column. Okay, three column, you have opening cash balance at hand, but you also have opening cash balance at the bank. And then you do these transactions. I think we can look at these transactions. And when we do them, we call it or we call it which now I don't know. But okay, we have the transactions. See, cash at hand opening, cash at bank opening. Then we pay William and Company by check 300,000. We receive a discount of 30. buy stationery for office use with cash 36. We pay sundry expenses in cash 60. I would draw out of cash for use from the bank 150. We make cash purchases 100. We receive a check 230 from Lowino. Discount allowed on that is 20. We make a cash sales 120. We draw out of cash for own use 70. Beth pays by check 100. We have a discount of 5% on that. And then now we have to pay Herbert Ashley check 265. We have a discount of 15. We bank all the cash apart from 50,000 which we retain. So simply prepare a 3-column cash book for all sales traders for that month of May 2016. If that is the case, then it is as good and as easy as we are going to see. So all we need is to come and create our Excel page, because I found it easy to deal with Excel. So the business is all souls traders. And this is a 3-column. Cash book for May 2016. So after giving those captions, you now may need merge that and center it, merge this and center it. Then I think you increase the angle, the font of view. So that is how our three column will look like. It must have date, details occur, column. There's a column for folio, column for discounts allowed. Now, this side, it is not allowed. It should be received. It should be received. Count received. Something like that. Okay. And this side, it is allowed. So now we post these transactions as they are. We are having May 1st. We saw very well we have balance, the F, and we are given, I think cash was, to go back to that question, cash was, how much? Okay, cash was 165 and banker was just 50,000. So we can now go to our, we can go to, failing to get my screen. This is my screen, so share that screen. So I'm saying, hope we are in Excel. Yes, we are in Excel. So cash opening was 165 and the banker was simply 50,000. So here we so go to the next transaction of the day, which was the next transaction of the day was we picked, we paid William by check. William by check, and that was 300,000. So come and look on to the date, which is did I pick the date right? Yes, the date is the third. Third, we're paying William by check. May 3rd, the details get to be William, the company, and we are paying by check. So this is when we talk about the 300,000. Then we go to the next transaction, which is when we paid William by check, we received a discount. So can we recognize that discount? It means that whereas we paid William, the actual amount that reached William was not 300, but 270, because we have a discount of 30. So that's how we recognize the discount, the 30,000. Paid by check, but also received a discount of 30. Then we bought stationery and we paid by cash, that is 36,000. So we come here and look at May. So we are saying it is May 6th. May 6th. This is, we are buying, stationery. We are paying for stationery. And the amount involved is buying for cash. We are buying stationery for cash, and we are paying 36. 36. So come and recognize that as a cash movement. To the next transaction, which is paying for sundry expenses in cash. Sundry expenses in cash, that is 30, sorry, it is 60,000. Come back, I've not picked the date of the transaction. The transaction happened on 8th May. So you come and talk about May 8th. This is sundry expenses. Is cash of 60. We have withdrew 150. Withdrew out of cash. Withdrew out cash for office use from the bank. That is 60. Meaning 150,000 on 9th. So cash receives. Come here, May 9th. Cash receives from the bank. So we shall have bank is giving away value to cash. This is letter C to denote contras. Letter C to denote contras. So cash receives 150,000 from the bank. Okay. From the bank. I think where I have put it, my duality, I wanted it because it should reflect on the same line. So that means we come on this date, May 9th. It is cash getting, cash receiving from bank. Let us see to denote contra. How much was received is 150. Okay. Cash gets from one bank, but on the same day we recognize that bank. So on May 8th, May 9th, we have sorry, cash. Bank are giving away value to cash, and what is given away is 150. Hope that is okay. Because it is a contra entry, we put letter C to denote contra, also to denote completion of our entry. On another date, we have a transaction of cash purchases, 100,000. So we come and buy cash. So the date was what? I didn't pick that, right? We bought 100,000. That is 12th May. So come here and talk about May 12th. It is, sorry, we are buying, so it should be an expense captured this side. May 12th. So we make purchases, and these purchases have happened for cash. The amount involved is 100,000. So we recognize 100,000 here as the cash purchases for the day. We'll go back and see which date next. We received a payment from Lawino, 230 by check with a discount allowed of 20,000. So we come, you receive on this day. It is, the date is, did I track it right? The date is 13th. So we got 13. Uh, we are receiving from Lawino. The amount involved is 130, 230 via bank with a discount of 210. So, a discount of 20. So we shall only record the actual receipt. Did we receive? Did we allow? We received a payment from Lawin. Yes, it is also like allowed. We allowed a discount. So yes, so this is a business expense, 20. And when we proceed to the next day, that is done. When we proceed to the next transactions, we are having cash sales of 120 on 16th. So we recognize those as cash receipts. Cash receipts of 120 on May 16th. We are making sales 120. So we receive our cash. Then we'll go to the next transaction, which happens without of cash for home use. So those are constituted as drawings. That is 70,000. It gets to be an outflow. So you come and talk about drawings on 19th. We're talking about drawings. And it is a cash, 70,000. So you recognize it. Okay. The other transaction is the birth paid check of 400,000. So we received, and we had allowed a discount of 5%. So 400,000, 5% would mean what percentage? 400,000. What percentage is that? I think when we apply the mathematics, it goes to 20,000. So we come and recognize that we are having a cash receipt. I will not capture the date, but if I can capture it, it is on 27th. So come on 27th and recognize Beth. Beth is paying via bank. So we have already seen that the discount is 20,000. And so 38 gets to be received by us. Transaction is paid Herbert Ashley by check 265, received a discount of 50. So it means that if we paid on 30th, if we are paying Herbert, so we come and talk about Herbert, 30th May, have Herbert. So we have received a discount of 15, making the actual payment to Herbert being 250 because the total was 165, of which when we paid, we received a discount of 15. So the total should be 15 plus 250. Then I think we've come to the end. We paid back all the cash except 50,000. So what does that mean? How much cash had we received? We come and total it from here. So all of your cash. Then when you total it, you are being asked to bank that cash and only maintain 50,000. So this is the total payments you had made already. When you total the payments you have already in cash, it is 266. Now, 266 vis-a-vis 433 gives you for temporal addition. I think people can see. This is the 266 I'm talking about. Now, that is what has already been paid from cash, yet you received a total cash amount of 420. So it means that if you are banking all you have with the exception of 50,000, first of all, the closing figure here gets to be 435. Now, of the 435, 266 266 has already been spent by paying out. So how much you have? So how much you have will be 465 minus what you have already paid. So you are left with 169. Of the 169, you are supposed to bank it all but only reserve 50,000 shillings on you. So it means that what you're going to create as a contra on May 31st, because the month is ending on 31st. So May 31st, you're going to have bank receiving from cash, contra comes in here to denote letters. I mean, C comes in to denote contra entry. In highlighting in red to make it even a little bit clear. So we are banking all the cash. So the bank receives the difference between 169 and the 50. So the difference is between 159 and the, 169 and the 50,000 will simply be 11. That one, that is what is banked. So that way we have already been helped to know what is banked. And if that is what is banked, it means that the contra will also be completed here on May 31st. We shall have cash giving away value to bank at a tune of 100 and something like that. This is the figure. Letter C comes in to denote contra entries, this and that. When that one happened, they told you that your closing balance here for cash is a balance BF. So on that day, balance, so May 31st, balance BF, so the CD gets to be only 50,000 was retained, so we put it there. And in essence, this one gets to be a closed account. This one now gets to be a closed account. So you can now determine how much bank-related balance you have, because the total receipts via bank were these. You total it up. You see, now when you total that up, we have that up, you have a bank, actually receipts via bank were this much. So what are the totals that have gone off the bank account? These are the payments you made through the bank. So you can just add them somewhere to know how much they are. Is 670,000. But in bank, I received 759. So the difference gives you what becomes the closing bank balance, right? So 759 minus 670, whatever the difference is what we should record. 759 minus 670. You are closing your bank account with only 89,000. And these combined should give you a closing figure a total via bank of, okay. So now these ones, you can simply bold, and when that one happens, you have balanced off because at the commencement of the next period, you will have on, I think that will be June is 1st, you have balance brought forward from May. Here it will be the 50,000 that you did not bank, and here it should be the 89,000 that remained with after. So in essence, this is the three column. Now you see, you can create the discounts received account and put in the total received, discounts allowed account and put in the total allowed. When you go to prepare financial statements, received becomes an income and allowed becomes a trading expense for the period. Basically, that is what we shall have as the account of interest. Okay. That's what we shall have as an account of interest. So this is our three column cash book for a business called All Saints. All Saints Traders, All Souls Traders. So in the interest of time, we can now go back to summarize from we can go back and summarize from the slides. So that is what we call three column. From slides, this is what we have because we are required to so this is what we shall actually have. And yeah, now the other new concept would be the petty cash book. I think we can leave with this here. We can do petty cash book next weekend. And the members can flow from the attached notes to do the exercise, the assignment. So the simple examples that are posted within there to do with the three column, okay, to do with the cash book recording. And I think with that, we can end this session here. I'm attaching the recorded lecture on Zoom, on Moodle for you to navigate through. Also attaching the book we talked about to the mail of the class president because the book is big and failed to come by Moodle. So he will share it with you via that. With that, I want to say thank you, members, for being active and attentive for today. And I think we can have the lecture stopped until we meet next time. I wish you the best.